The Uber stock is one of the most discussed and most controversial stock on the stock market, and today we are talking about 3 fascinating facts about the Uber stock, so stay tuned and let's roll!
Wolf of Dubai.
If you're new here to this channel, you're most probably wondering what is in the bag 1K. We're just celebrating 1,000 subscribers here on this channel. I'm so thankful. I just made a video about it yesterday, so make sure to check it out here on this channel. But of course, if you are on the search of one of the best stock investing channels on YouTube, search no more, because we are the fastest growing stock investing channel community out there from the Middle East. So I'm vlogging every single day, breaking news, stock analysis, stock market, and sometimes also finance and all the things around it in a very entertaining way. So thank you very much for watching. Make sure to like also this video, and let's just dive into it right now. So Uber is a very special stock because it was one of the unicorns, a company that reached 1 billion valuation in the private equity market, and then in May, finally they did it. They did their IPO, and with a big bang they came to the stock market. So let's look into the stock, what happened since May. If we are looking into the stock started somewhere about $40, $41, $42 and is meanwhile under $29. So this is a loss of 30% of value. Now there's a couple of reasons for that, but first of all, I just want to visualize for you that this is evaporation of $30 billion valuation, and we will come to the valuation in the second fact. But the first fact is really interesting because the valuation started actually at $80 billion, and this was by that time in May 2019 the double valuation than Tesla has, but with half the revenue that Tesla has. So I thought, wow, this is very ambitious IPO, a very ambitious valuation as well. So actually I was skipping this IPO, though I think Uber is an interesting space, but I think in long term they have a lot of competition coming up. So let's dive into something that is very important here, because why this valuation or the stock price crumbled around 30%. Now the very first thing is that apparently once you're in the stock market, you have to give some guidance, you have to give financial data every 3 months, and they show that they are losing, no, you know what, they are bleeding money. They are bleeding money really badly. And on the other side, what all the investors expect to have some profitability one day, it's really hard to see at this point for some investors, or for the most investors, and that's why the stock lost about 30% so far. Moreover, the fight with the regulations, it's still ongoing. The taxi business is still very strong worldwide, so they have to fight with the regulators. And just lately news was, for example, that they lost their license in London, and London is a very big ride-hailing capital in Europe. So these are bad news, and all this bad news are coming up more and more, and they are saying that they have other, let's say, horses in the race, like Uber Eats or other things, or Uber Freight and so on, but still there's nothing so good and so big like the Uber ride-sharing business for Uber. So we shall see how this further develops. So let's dive in the second point, which is the valuation. Okay, so let's dive into the stock. So you see that the stock is actually currently around the valuation of $50 billion. Now, this number can seem high or low. I always like to compare this number to the sales, because this gives you a good indication how much the company actually sell per year versus how much they are valued. And if you want to have a cheap bargain on a stock, then mostly the PS ratio is around around 1 or even below, so they're making more money per year than they are valued, and this is a very good sign. Now, in case of Uber, the price to sales ratio, just to put it in perspective, is 3.33. So they have to put all the turnover on the table 3.3 years in a row just to have the valuation compared to each other. So I think this is maybe a little bit on the higher side, but let's have a look on the other competitors, which is in this case Lyft. So Lyft has a market valuation of $15 billion, so Uber is triple that amount. And the funny thing is though that Lyft has almost the same sales to price ratio, so it seems to have a similar valuation compared to the turnover that the both companies are making. Now, for me, and we will talk more about this in the conclusion of this video towards the end, and if you are new here to this channel and you like it so far, make sure to thumb up and smash that subscribe button. I will be very, very happy if you become one of the wolves to be informed and be a better investor every single day. Now, when we are looking into this market capitalization, it's always to see what can I get other for the price. And I believe that there's a lot of companies that have a better valuation ratios out there and are more future proof than Uber. But this is a pretty good price tag already. So I don't see that much value to grow over time, except they really roll on and make one of the horses that they have, like Uber Eats, ride sharing, or other things really profitable, and maybe cut some of these horses, because I believe if you have too many horses, then you get maybe confused in which way to run. So anyway, let's dive into the third fact. This is quite interesting, so stay tuned. And the third thing I want to discuss with you, the alternative. The alternative to Uber stock is the Lyft stock. Obviously, Lyft is basically the counterpart to Uber, but it went as a viral thing that it's the friendly Uber. They are concentrating only on the US, so they are a much smaller company compared to the valuation of Uber. It's about a third, as we know right now. And I believe that if you want to start smaller in the business and they are only or mostly concerned about the ride-sharing business and want to be profitable there as well, so I believe maybe this is a good alternative for you. Now, putting both stocks next to each other, we see a very similar pattern. We see a very big downturn also with Lyft. With Lyft, you see that the stock lost about 37%, which is ridiculous. I mean, consider this, you are an investor in Lyft and you are looking forward years to this IPO. Then this company makes the IPO in March of this year, so even a couple of months earlier than Uber to have a competitive advantage. And then you lose like 40% of your value. Congratulations, very well done. So actually, I believe that Lyft is a good and interesting alternative to Uber. Look at this stock. The funny part is that their price to sales ratio is exactly the same, which we talked about earlier. So Lyft works in a much more smaller niche, and I like this more when the companies grow from this niche and take on another niche, like for example Amazon. They started with e-commerce and figured this out, and then years later they started Amazon Web Services because it fit in the whole vertical business integration. And Tesla, for example, is doing the same. So you can see a lot of things, but if you just put out different businesses just to diversify or give more, and don't get me wrong, I totally understand that Uber is trying to diversify because the ride sharing business is first a very capital intensive with time going on. It's not like you're doing more rides and the price for rides gets less, but actually get more because the drivers get more rides, the drivers want to have with more alternatives, need to get paid more, and so on and so forth. So actually with regulation, self-driving cars, all these things that you might have to invest as a ride-sharing business, I think this is quite important to watch for you as an Uber investor. Now let's jump to my personal conclusion. I know there will be so many tongues out there that say, hey, you get this totally wrong, Uber is a future business, and so on and so forth. And I totally get it, and I agree with you. But it's not an investment for myself, not for the wolf, because a couple of major points. First, I think the product is unique, and it's very, very nice that they could scale it. But you can see that they also could not scale it, and you have this regulation things going on. And for example, in Asia, there are a couple of different counterparts that are successful. Uber is not there, so they're missing the revenue over there. And I think that, you know, coming up with Tesla or other Google, they can have this product copied like in a second if they want. They have much bigger database. Facebook, you know, have much bigger database. They just say, hey, tomorrow we do Facebook rides, and then Uber has a really big problem. And then you can even pay within the Facebook ecosystem, Instagram, and so on. So I know it's easy to say, to make the statements, but I think that the product is not unique for me enough to be an investor inside it. So another thing is that the new products like Uber Eats, they still need to grow. They still need to grow to have this valuation or to justify a big portion to really say Uber is diversified. Now Uber Eats is, you know, very, very like maybe $1 or $2, $3 billion value of this 50 billion valuation. So it's a very small part still, and I believe that they still have room to grow, and I don't know what's coming up next, and they are just, you know, couple of options. You know, you can go for Uber Eats, you can go for DoorDash and all the other things, Postmates, all the other things, and you know, the uniqueness of all of them is really questionable on the long term. So also there's room to grow, and still I believe there is much things to learn for Uber in these businesses. With a super interesting point, the regulations, because on the one side, once you figured out the regulations, you have almost a monopoly against the taxis, because not so many ride-sharing businesses will try to go on the war of regulations. On the other parts, it's so unpredictable. There was just the fake ID case in London, and zack, no business in London. So this is very dangerous, and to be such dependent on regulation, on state, on government is too much for the wolf. So let me summarize it. You might invest in Uber, I believe, and I wish you all the best, but I'm thinking to still wait on the sidelines. I want to see how the company develops. The company is still young. The company has huge potential. The company can be profitable one day. So I'm standing on the sidelines. Maybe when the stock price drops and drops and drops after a couple of years or months, maybe then, and with a clear path to profitability and to a great product, I would be an Uber investor. So never say never. I see you tomorrow because I'm vlogging every single day. Thank you for watching. Subscribe and like. Thanks. Bye. See you.